Hey folks, here's another Alphabet Options update. This is for week 51 from July 3rd to the 7th. From last week's update, you'll know that I sold a few short calls at 122 and a few short puts at 115, and by the end of the week on Friday, Alphabet finished at around 119, and because that was in between these two strike prices, all of my options expired out of the money, and I kept the premiums. So I had $85 in premiums, plus I closed out my negative share position on Monday on the 3rd, if you remember from last week's video, and I was able to make a profit from that. So overall, I'm up $335 last week, and now I'm sitting at $99.61. So overall, not too far away from my goal, which is to make $10,000 in 1 year, which leads us to this week, the final week of this Alphabet Options Challenge. So I don't need to make a lot of premiums this week to hit my final target. So I'll probably do something a little bit different than a regular short strangle this week, because as we look at the daily chart for Alphabet, I'll just remove those previous lines. It looks like we are heading down now. We were going up really steeply, and now the momentum has shifted. You can see the green 9 EMA line has crossed below the blue 21, and both are heading down. The 50 exponential moving average is also starting to curl down. And not only that, but I've mentioned this for the past 2 weeks, but the MACD is heading down. And just recently, like today, which is Monday, July 10th, the MACD has crossed below the zero line, which is this dotted horizontal line here. So those are all negative sentiments for this stock. And because it has touched the top of this channel 1, 2, 3, basically 4 times, it shows that this trend is very much in play right now. And the end of the week, which is this gray line over here, July 14th, Friday, is only 4 days away. So even if there is strength in the stock, I wouldn't expect it to go too much above the top of this channel, which is around 120. So just like last week and the week before, I have a bearish bias because there are more signs that the stock will be going down than going up. And one option strategy I can implement is the ratio spread, in this case, a call ratio spread. So what it allows me to do is capture any downside movement of the stock. And I also have the opportunity to make a lot of money if the stock goes up a little bit, because I could be wrong and the stock goes higher. But because I think the chances of it going higher is small, and the chances of it going really high from this point is even smaller, the ratio spread kind of makes sense because I only lose money with this strategy if the stock goes up a lot. Theoretically, that is possible, but the balance of possibilities would definitely be in the favor that Alphabet would either go flat or go down. So looking at the option chain here for Alphabet, pretty average implied volatility this week at 27. July 14th is the expiration date I'm looking for. So I'm going to go just a little bit out of the money at like 118, and I will start here by buying this 118 call, and then I will go down here to 119, which is $1 higher strike price, and I will sell 2 of these 119 calls. So the 118 strike that I'm buying is more expensive than the 119 that I'm selling. However, because I am selling 2 119 contracts, this will net me an overall credit for this strategy. So sell 2 119 and buy just the 118 call strike. And if I go down here to the price, you can see that's going to net me about $31 in premiums per contract. And I'll just have a couple of these. So if I look at the profile of this strategy and try to figure out where my break even is, you can see IB is going to tell me the break even is at 120.29, which is right here. So basically, by the end of this week, this dotted gray line here, as long as Alphabet closes below this point right here, then this strategy would be profitable. And if it goes above this purple line, then the higher it goes, then the more money I will lose. But usually when a stock is in a trend, it tends to follow that trend and bounce off the tops and the bottoms. So it touched the top here, bounced off the bottom, top, bottom, top. The next target is going to be most likely down here. It had a chance to bounce off the middle of this channel, this dotted blue line here, but it doesn't look like it's going to do that. I mean, there's still 4 more days left, so anything can happen, but it's more likely for the stock to go down than up. So over here, I'm going to set this, now it looks like it's 130, but I'll try to get it filled at 131. And it looks like it's dropped now, so I will also drop that down.
Order partially filled. Order filled.
Okay, so those two filled at $28 a piece with the $4.21 commission. Now, it would be ideal if Alphabet closed the week at a price of $119. As you can see, that is pretty much my maximum gain. And instead of just making the $28 times 2, I can make over $250. So that is the advantage of this strategy, is even if I get the direction wrong and Alphabet goes up, as long as it doesn't go past too far above the top of this downward sloping channel and it closes right here at like 119.5, then I can make a good amount of money there. Let's check the profile again. At 119.5, it looks like I'll make about $158. Now, if the trend changes and we get like a really strong reaction and the stock goes up really high, then I'll probably just roll this position to the next week or close it out for a loss, in which case I may have to put in another trade later this week to try and achieve my goal. But otherwise, I'll just let these options expire out of the money. So hopefully for me, Alphabet continues to go down or go flat or up a little bit, which is actually ideal for me. But I'm happy as long as it doesn't go up too high. So 4 days left in this challenge. I'll give you guys the final update next week, and we will see what happens. Thanks a lot for watching, and good luck with your investments.